Hello everyone, welcome back to my channel Commerce Student. Today in this video, we will understand the basics of bookkeeping and explore the differences between bookkeeping and accounting. So let's start the video. What is bookkeeping? Bookkeeping is that branch of knowledge which tells us how to record financial transactions of business. Financial transactions related to sales, purchases, receipts, payments, which are day-to-day going on in business. Financial transactions are those transactions which can be expressed and measured in terms of money. These find their place in the books of accounts. For example, I purchased a gel pen for Rs 20. Here two activities are taking place. One is that I am giving money worth Rs 20 and on the other hand, I am also receiving pen in return for money. Therefore, when there is an exchange of goods or services, including an exchange of money, it is called a transaction, and when it can be expressed and measured in money terms, it's financial transaction. Okay? According to the definition given by J.R. Botley Boy, bookkeeping is the art of recording business dealings in a set of books, which means that bookkeeping is a skill by which business transactions are to be recorded in books like journal, subjournal, etc. Bookkeeping is often routine and clerical in nature. Nowadays, bookkeeping is done on computers, which saves a lot of time. Now, coming to the process of bookkeeping. So, bookkeeping covers four steps, which are first, identifying the transactions and events. So first of all, you have to figure out the transactions and events happening in business. Transaction like purchase of raw material, event like use of raw material for production. So in this setup, all transactions and events that are financial in nature relate to the business and have a documentary evidence, that is voucher, are to be identified for recording and find their place in bookkeeping. It should be also made clear that bookkeeping is not meant for non-financial transactions, such as receiving a price list from vendor. Second, measuring the identified transactions and events. In this setup, all identified financial transactions and events are measured in a common measuring unit, that is ruling currency of a country. Third, recording the identified and measured transactions and events. In this setup, financial transactions and events are recorded in the book of original entry, that is journal or subjournal. It is called book of original entry because all transactions are first of all recorded here. Transactions are recorded date-wise and chronologically, following an order of occurrence. And fourth and last step is classifying the recorded transactions and events. In this setup, all transactions recorded earlier in journal relating to person, property, income, expense or loss are posted or transferred in the respective accounts maintained in the ledger. So ledger involves clubbing of similar transactions under one head. You must be careful to group transactions of same nature into proper ledger accounts. For example, purchase of furniture, machinery, which are assets, are grouped under respective asset accounts and posted there only. Difference between bookkeeping and accounting. Bookkeeping and accounting are differentiated on several bases. Some of these are: first, stage. On the basis of stage, bookkeeping is the primary stage. It is the basis of accounting, whereas accounting is the secondary stage. It is the culmination of bookkeeping. It starts where bookkeeping ends. Second, objective. On the basis of objective, the primary objective of bookkeeping is to accurately record financial transactions and maintain financial records, whereas the primary objective of accounting is to know end results of business, that is profit or loss, financial position, that is, position of assets and liabilities, and communicate them to parties like management, employees, investors, customers, etc. Third, scope. On the basis of scope, bookkeeping includes identifying and measuring transactions, recording them in journal, and classifying them into ledger accounts. Whereas accounting includes summarizing the classified transactions, analyzing the summarized results, interpreting the analyzed results, that is to get meaning from them, and communicating the interpreted information to parties. Fourth, who performs. On the basis of who performs, bookkeeping is performed by junior staff, whereas accounting work is done by senior staff. Fifth, knowledge level. On the basis of knowledge level, the bookkeeper does not require high level of skill or knowledge, whereas the accountant must possess high level of analytical skill and should be well qualified to fit for the job. So that's all for today's video. If you want to support, like the video, please subscribe to my channel and press the bell icon to get new video updates. See you in next video.